all bills has gone up. Chancellor Jeremy Hunt's latest tax rate is just 1 month away, and savers should be working night and day to reduce their exposure. It may be too late to carry out complicated tax planning, but simple measures could still save thousands of pounds. One can be completed in just 24 hours. Investors risk higher tax bills from April 6 when Hunt slashes the threshold for paying tax on capital gains from £12,300 to just £6,000. The capital gains tax threshold shrinks again to just £3,000 from April 2024. Hunt is also halving the amount of tax-free dividend income investors can earn each year, from £2,000 to just £1,000 on April 6, then to just £500 next year. Dividends above that are taxed at 8.75% for basic rate taxpayers, 33.75% for higher rate taxpayers, and 39.35% for additional rate taxpayers. These taxes only apply to savings and investments held outside of the ISA tax wrapper, so savers can use their annual £20,000 tax-free ISA allowance to beat Hunt's tax grab, said Alice Hain, personal finance analyst at DIY investment platform Bistinvest. The process is known as Bet an ISA, which involves selling investments one day and buying them back the next inside an ISA. It can work for shares, funds, investment trusts or exchange-traded funds held in a general investment account or employee share plan, Hain said. Many older savers may have privatization shares outside of an ISA, but their holdings have been too small to pay tax on their income and capital gains. Thanks to Hunt, that could change and they should protect them now. Investors usually have to wait 30 days after selling their investments before buying them back, under a rule designed to stop a sneaky tax dodge known as bed and breakfasting. This saw investors sell their assets at the end of the tax year on April 5 to use their annual CGD allowance and buy them back next day. That's no longer possible, but Bet an ISA is an exception to that rule, Hain said. Investors who act fast can take up to £12,300 of profits free of CGD before April 6. If the investments are held jointly with a spouse or civil partner, a couple can double this to £24,600. You can do Bet an ISA after April 5 too, but at that point the CGD threshold will be much lower at just £6,000 each, as well as sparing savers a CGD bill. The ISA structure puts an end to any worries about paying dividend tax for life. Just remember to calculate your capital gain carefully before selling your investments to ensure you don't bank too much profit and make yourself liable for CGD, Hain added. If you don't have a stocks and shares ISA from before, then you may be able to open one with any existing stockbroker you have dealings with, say, for your privatization shares. Otherwise AJ Bell, Bestinvest, Chelsea Financial Services, Hargreaves Lansdown, Interactive Investor, and others offer competitive online ISA platforms. If you are moving your investments to an ISA with the same provider, the sale and purchase can be done simultaneously with the whole thing done and dusted in just 24 hours, Hain said. Most platforms will complete the process automatically if you complete a Bet an ISA form, said Sarah Coles, Senior Personal Finance Analyst at Hargreaves Lansdown. You will pay 2 sets of trading fees when you sell and buy back your investments, plus stamp duty of 0.5% on the share purchase, so may have slightly less in your ISA afterwards. You don't have to buy the same investments, but can invest in different funds if you wish, or even hold the money in your platform's cash account. Some platforms provide interest payments on cash balances, and you could drip feed the money into the stock market thereafter. Every adult can save up to £20,000 in an ISA this tax, which should be enough for most people to bet an ISA their investments. Couples have £40,000 to play with. If you need more, the under-18s get a £9,000 junior ISA allowance, so you could pay money into that. If you have already paid money into an ISA this tax year, including into a cash ISA, this will reduce the amount you can add now. Some ISA platforms have a cutoff point for Bet an ISA transactions, which can be up to a week before the end of the tax year. Another option, known as Bet-in Pension, allows investors to shift money into my self-invested personal pension instead. So don't be a sleepyhead. Time is short, but this 24-hour trick can still help you escape Hunt's savings and investment double tax grab.